Value investing is easily one of the most popular ways to find great stocks in most any market. After all, who wouldn't want to find compelling buys or stocks with a discount compared to fair value? One way to find these companies is by looking at several key metrics and financial ratios, many of which are crucial in the value stock selection process. Recently, I bought Verizon Communications, but only after I was alerted to it by the piano man. I'd been watching Verizon for some time but had not noticed it was ready for serious consideration. Having previously completed most of my research on Verizon, I wanted to consider a few last minute measures to make sure Verizon could make the cut. So, let's take a look. A key metric an investor should always look at is the price to earnings ratio. Simply put, a PE ratio reflects how much investors are willing to pay for each dollar of earnings. On this front, Verizon has a trailing 12-month PE ratio of about 11.3. This level compares well with the market since the PE for the S&P 500 is about 27.83, more than double the PE ratio for Verizon. Equally important is that the current PE for Verizon is below its historical midpoint over the past 5 years. Another key metric is the price to sales ratio. The price to sales ratio compares a given stock's price to its total sales, and you've heard me talk about this before. Typically, a lower rating is generally better, and I like this metric more than others because it looks at sales, which are much harder to manipulate with accounting tricks like earnings can be. Right now, Verizon has a price to sales ratio of about 1.79. This is way below the S&P 500 average, about 4.93. This is also low compared to Verizon's historical level. So far, so good. Another metric I like to look at is free cash flow. Free cash flow measures a company's financial performance. It shows the cash a company produces after deducting the purchases of assets such as property, equipment, and other major investments from operating cash flow. In other words, free cash flow measures a company's ability to produce what investors care most about, cash that's available to be distributed, like dividends. So, looking at this chart here, the real-time stockquote.com, simply move up here into this upper bar, and you have a whole bunch of choices here. But when we're going to look at free cash flow, you go to financials. Now I'll click on that, and the computer is moving relatively slow today, so we're loading up right now. Now once you load that up here, you go down here into financials, and just directly below that is cash flow. Click on that and let the page load. Again, it may be a bit slow. There we are. And let's move on down. It's at the very bottom, wouldn't you know? So at the very bottom here, you have free cash flow. And you want the free cash flow to be increasing every year, as it has done here. 5.6 billion. 8.0 billion, 17.6 billion, 17.8 billion, and the most recent $23.58 billion. Now, you want to make sure that is moving up, and you also want to make sure that it can well cover the dividend. And here's your dividend. Back in 2016, it was 9.26 billion. That's the total amount of dividends paid in 2016. And each year it's been rising all the way up to 2020. You have 10.23 billion. So that 10.23 billion has moved up from the prior years. And so you want to see increasing dividends. And of course, as I said, increasing free cash flow. Okay, let's go to the charts. And that's my last test. And so now we're taking a look at a 2-year weekly chart on Verizon Communications, and the symbol is VZ, And for disclosure purposes, as I've stated, I do now own Verizon Communications. So I did say that this chart is my last test, which is true, but it's also my first test. If I go to the monthly chart and see something that doesn't look good on the monthly, forget it. Verizon looks fine on the monthly. And so I'm judging here when to buy on the weekly. I'll also look at the daily, but we're looking at the weekly right now. And as you can see here in the most recent, say, month or two, it's been bottoming and basing with that bottom here. And I got in someplace in that level there. I can't remember exactly what I purchased it at because I did a lot of buying. Here, the volume was increasing, and you want that when it's basing and ready to turn up. Here into the Mac, you can see a very nice bottom and basing here. The fast line hasn't come through the red line, which means there may be some sideways movement, and actually, it might even come back down again. But I'm pretty convinced that sooner or later, the fast line is going to be moving up and through, and that's going to confirm my purchase. Moving here, the histogram has been moving for several weeks on the way up. Into the price rate of change, also a nice bottoming process occurring right here as it did perhaps back here. We're at a relatively low level of about negative 3.79, but we're close enough to the zero line, so I think there's plenty of power. Here into the RSI has already bottomed and it's running. I like to see some of these oscillators run before the MAC crosses through. You can see here stochastic is also running, and then the same thing with the Williams, nice bottoming. Your maximum negativity was there in early February, and we've been running since then. So you've had plenty of notice that this stock was going to run. So I decided to go ahead and pull the trigger, even though the fast line hasn't come through the slow line. But once again, that could mean some sideways trading for a while. I wonder if we had some sideways trading during this time frame, but it doesn't matter to me. I'll hold on because it has a nice dividend, as you saw. Moving back here to the price chart, one last look, and to me, we have a nice upward trend moving, bottoming and basing, and it looks like it's breaking out. It's moving through the 20 EMA, and I think it'll hit that 50 EMA and then head back up to $62 a share soon enough. But in the meantime, I'm collecting some fat dividends. And for today, that's ChewDog Charts. Thank you.